This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview. Hello and welcome back to Research Talks here from Stockbox with Alan Green and Dan Flynn on what has definitely been an August quiet week for us at Stockbox. Anyway, not a lot of news hitting the market. I do see an update from Premier African Minerals this morning. Optimization still ongoing, but it does read fairly positive. So let's see how things develop with Prem. Hopefully they can get that all sorted in the next week or two. But apart from that, there's other bits of news, but nothing's really standing out. But Alan, is anything you've seen on your end that's sort of catching your attention from this week?
Well, I think from my standpoint, just one of the companies I'm going to talk about, Harena Resources, there have been some developments there that week. They've just raised some money, of course, and brought two new people in. But I'll be covering that shortly. But apart from that, it's just been it's actually been a busy week from ECR, of course. ECR have provided operational updates and launched ECR Digital 2, which is, of course, they've outlined the Bitcoin treasury policy and how they're going to implement it. And then, of course, the appointment of Mike Parker who was already a consultant to the company. Mike has now stepped up and become a non-exec director, or senior non-exec director. So that's good to see.
Yeah, good. It is nice to see, isn't it? Yeah. So that's and also ECR, of course, that was quite positive news, I think, from Blue Mountain. With them getting into advancing that into low-hanging fruit production. So there'd be a fair bit to come from them because, of course, they're moving that drill rig straight on, aren't they, as well?
Well, they are. That's right. The drill rig was there. Well, it was en route to Lulworth, and they decided to bring it into Blue Mountain. Of course, it's paid absolute dividends, and it's been fully engaged there. And the grades, there are plenty of videos floating on social media. Adam Jones, the chief geologist, provided a great video just describing the process, explaining the process of how they're sort of panning the gold and then taking the samples off to the lab. But it looks really exciting, and straight into production there. That's going to materially change the outlook for ECR and really put it up onto. I think it will lead to a substantial rebasing for the company.
Yeah, I hope so, indeed. Okay, good. Well, Dan, anything you've caught your eye, or shall we talk about Capital Metals?
I was just going to quickly say on the broader market, the big news yesterday was Trump opening the US retirement market up to crypto investments, which will definitely be worth keeping an eye on.
Oh, right. I didn't see that. So that's open. So that means that pension funds can invest.
Yeah, exactly. And people can invest their personal pensions into crypto. It might just be the personal pensions. I'll come back on the details, but the point is, I think it's like a 9 trillion market I saw, and you take even 1-2% of that, put it into Bitcoin or one of the other coins, the alternatives, and that's surely going to have a materially positive impact, perhaps over the short term and definitely over the longer term.
Definitely, that is quite a big thing, isn't it?
Yeah, substantial. Yeah.
Okay.
Yeah.
Well, Capital Metals then, Dan, tell us about this.
Yeah, so I've been looking at Capital Metals a lot this week as I've been doing some research on them for the Out of the Ground website, and that will be out soon, available on their Twitter feed. But I think the company has an excellent core offering. And even after advancing significantly from 1.7p to nearly 2.7p a share recently, it still looks undervalued to me with a market cap of £12 million. So with this in mind, I thought I'd go over it this week to say what I think the investment case is. So Capital Metals is the 100% owner of the Taprobane Minerals Project, which is based in Sri Lanka. So it's a heavy minerals asset, and specifically it contains materials like ilmenite, rutile, zircon, and garnet, which are used in the manufacturing of everything from paint to ceramics and abrasives. I won't go into the markets in too much detail because we'll be here all day, but the key point is they all present favourable supply-demand dynamics that point towards rising prices over the coming years. So you got that nice base there. So now Capital's Taprobane project hosts a JORC resource of 17.2 million tonnes at 17.6% total heavy minerals, which makes it one of the highest grade undeveloped heavy mineral sands deposits globally. And the 2022 PEA gave the project an NPV of $155 million, an IRR of 56%, and a payback period of 3.7 years. So just a couple of things to note on those figures quickly is, first, they're all base case figures. They increase even further in the upside case, as you'd expect. Secondly, they're not only based on only on an initial 10-year mine life, but they also do not account for the enormous upside potential of Taprobane, which I'll get into in a moment. So you can see even these conservative figures are pretty big relative to Capital's current market cap. So again, that's only £12 million as it stands. And the interesting thing about Taprobane is production isn't some far-off nebulous goal, as we so often see in the junior space. It's actually very achievable and in a short space of time as well. So Capital is planning to take a staged development approach to the project's development to reduce upfront capex. Final investment decision is targeted for the end of the year. And following this, Capital has said it expects stage one production to commence once a 9 to 12 month construction period completes. So it's not long at all. And once stage one production begins, Capital expects the subsequent stages of Taprobane's expansion to be funded from the cash flow it begins to generate. So this is important because in theory, it means Capital only needs to get enough funding to get stage one live and then all systems go. And the good news is that it's well on its way to getting this funding sorted. So in May, Capital announced a strategic investment from Sri Lankan investment group Ambion following a period of due diligence. So in the first instance, this totals $4 million, which Capital expects to get it through to final investment decision. And from there, the two parties have signed an MOU for a further $20 million of funding split between equity and debt, which the company expects to be enough to get it through to production. So that's great, right? Of course, that $20 million funding needs to be definitively confirmed. It could always fall through, but if we assume it's delivered, then what we have here is a company with a clear route to incrementally increasing production that's internally funded and in turn cash flow over the medium term. So even after the risks of that funding falling through are maybe taken into account, I think a £12 million valuation is quite conservative. And really, that's just the start. The resource used to calculate Taprobane's current economics was defined from shallow hand drilling down to an average depth of just 1.6 meters over an area of just 65 hectares. I say just, knowing that is quite a large area, but in mining terms. So the company long suspected that the mineral potential here was a lot larger. And this year it's begun to confirm those suspicions with an extensive phase one drilling campaign down to 15 meters. So this has confirmed open mineralization in all directions, massive new zones of mineralization, both inside and outside the known resources, and assays with total heavy mineral grades in excess of 60%. So remember that 17% average grade was already very high globally. So that's massive. So the goal is to keep drilling with a view to updating the JORC resource Taprobane before the year's end. Still, based on the early signs, it would appear that the economics of the project, which are already pretty attractive, could become really very impressive as more work is completed. And, with that, the case for Capital being undervalued as current market cap only increases. So, yeah, I'm very bullish on this one, actually, but perhaps the market's ignoring it at the moment because heavy minerals aren't as interesting as the likes of gold, copper, nickel, etc. And there's also some geopolitical risk associated with Sri Lanka, though that seems to have passed with the recent conclusion of the general election. But as more progress is made throughout the year, I'd expect to see interest continue to grow as the company reaches that key final investment decision point.
Well, yeah, as you say, heavy minerals are not. There's not so many opportunities, are there? The only one that springs to mind is Gazira Global, but they have got into production on the heavy mineral sand at the moment, and they're making revenue. So it's perhaps less known, less understood, less exciting, maybe, but nonetheless, they are projects that can indeed be worth a fair bit of money. So you think what the market's just not seeing it at the moment, perhaps because of Sri Lanka? I was going to ask you about what you think about Sri Lanka as a jurisdiction.
So I think so. It has started to see it a bit. I think, like I said, it's up top. The share price has risen a fair bit recently, but I think so. The drilling that they've been doing was delayed due to the election taking place. I'm not sure exactly why, but they were waiting for that to conclude, which it has now. So I think there is maybe a little bit of wariness still around the geopolitical side of things. And when you mix that with the fact that heavy minerals aren't as perhaps well covered in the general media and even in the media in our space, the junior resources space specifically, I think perhaps it's just missing a lot of people's radars. But you get some that can only last so long once it starts really reaching that production. And I think the key point is it gets to stage 1 production, and then the expansion, which will be several phases beyond that, just for the initial resource, will be internally funded. And then you've got all the upside from that larger resource that's likely to be coming out before the year's end. And it's a decent upside case.
So we've got, in terms of what's going on, so just so it's clear, the stage 1, is that underway now, or is that what's coming soon?
That's what they're approaching. So they've got the funding to go to final investment decision. Then there's a 9 to 12 month construction period before stage 1 production begins.
Right. Okay. So that is stage 1, and it is a production phase. Okay.
Yeah.
Okay. And that's a revenue phase as well, then. Yeah.
And those revenues will then be used to fund incremental increases in the production. I'm no geologist, but or miner for that matter. But my understanding is that producing at these projects is a lot simpler than it would be at like an open pit mine. I think it involves a lot of digging and walking through the material you dig. So I think it's quite simple and perhaps less risky. There's less room for things to go wrong on an operational front in that respect.
Sure. And do we know much about the project economics at the moment for that stage 1 in terms of what it will generate?
I have. Sorry, I'm just going back from my notes. The project as a whole has on that resource has that NPV of 155 million. Stage 1 will obviously be a portion of that will gradually ramp up.
Yeah. Okay.
Sorry,
I guess there's no information on what they expect to sort of having to the cash flow terms for when the production starts, is there?
Not off the top of my head. I may have missed that during my research. They did have a figure that they were targeting, which I can't see for stage 1. So you could probably work it out on that basis. Apologies.
Okay,
I don't know where that's
got
going.
155 million of NPV at the moment with them.
Yeah, for the in the base case for the initial.
In the base case, yeah. Okay. Well, they're not going to carry on if it's not economic, are they? Clearly, if they've got the funding in to do that. So, okay. Well, yeah, that's one to. We haven't actually ever spoken to Capital Metals, I don't think. Or if we did, it was certainly a long time ago.
Yeah, it'd be a good one. It'd be a good one to speak to learn more about.
Exactly. Yeah, exactly. Okay. Well, thank you, Dan, for introducing Capital Metals. So, want to perhaps, for us to follow up on and see if we can speak to management there and get a sense of, perhaps some of the economics behind that, what they expect to come out. So you can perhaps sort of compare that market cap at the moment to what it potentially, the value could be worth once they do get into production. Okay.
Yeah, definitely.
Thank you, Dan. Alan, do you have any thoughts on that, first of all?
Well, just to say that the company I'm about to discuss, Harena Resources, has a very similar low-cost production cycle in that it's the minerals are easy to process. The production costs are low, and that has got to be attractive for any mining project. But I think also projects such as Capital Metals projects in the Southern Hemisphere, perhaps they don't get the focus that they deserve. And when you look at the companies listed on the ASX, of course, that's a lot of the companies have projects in these regions, and they trade at a far higher multiple. So I think with some good publicity and some interviews on Stockbox, I think Capital Metals has got every opportunity to raise its profile, and it just probably needs a higher profile and more exposure to the UK centric investor audience.
Yeah, just to say, I totally agree, Alan. And I just looked at the presentation, and they're targeting 125,000 tonnes per annum high grade in heavy minerals in stage 1. So whatever the price is, you get an idea.
Yeah.
Of the
Okay. Yeah. Yeah.
Yeah.
Okay.
Perfect.
Yeah.
Okay.
Cool.
Excellent. Well, Alan, you mentioned Harena, so let's hear about Harena.
Harena Resources, London listed, HREE is the EPIC code. It came to market in February this year. It reversed an RTO into Citius Resources and raised 1.35 million at 3p. And as you'll see now, the company is, or the share price is currently sitting at 1.5p. But there are reasons behind this. Much of those that we've Dan, you outlined just now with Capital Metals, perhaps lack of exposure or a lack of understanding of projects in the Southern Hemisphere. So Harena own the Ampasindava rare earths project in Madagascar, which is obviously the big island at the southeast foot of Africa. Now, this is an ionic clay rare earth deposit with a mineral resource estimate of around 630,000 tonnes at 895 parts per million total rare earths. There is a NI 43-101 report published, or was published previously. Metallurgical test work has been completed, and the heap leach process that was used to test the ionic clays results in very acceptable mineral yields into end user material. Now, of course, the production process that I alluded to just now, very similar to mineral sands. It's a low intensity process compared to, in fact, Alan Mulligan, who is the technical director of Harena Resources, compared it to hard rock. And of course, if you've got hard rock, that's got to be stored and processed, and the actual process of processing that hard rock is a lot more intensive, a lot more capital intensive, and is less friendly. Whereas rare earths are easy to store, easy to process, and because of the process is called adsorption, that's ADSORPTION, rather than absorption. Adsorption means that the rare earth minerals are or cling to the outside of the clays, and so they can literally be washed off, and that is the process, and that's what makes it so easy and makes it a low intensity and low cost process in comparison. So the rare earths project or the Ampasindava project has been established there for many years. It's also a very sustainable project too. So when the soils are taken from the region, the mineralization is literally a few meters under the surface, and so the extracted residual material is taken to be washed, and it's then returned to site. So within 6 months, given the climate there, the vegetation will have grown again, and you'd never know that any mining had taken place there. So that's a very important part of the process. The metallurgical testing I mentioned, samples have been tested by the University of Toronto, also by SGS. And we've got high extraction rates using ammonium sulfate leach, 88%, neodymium, 73%, dysprosium, yttrium, 86%. So the results are consistently high across the board, and also, as I've already outlined, it's a very environmentally friendly project. So some changes since the IPO. In May this year, the company announced that the mining study there was advancing. So what the company now has to do is to complete a PFS, because of course it's quite a few years since the work was undertaken there. They also have to submit a project design. In other words, the actual process of extracting the ionic clays, which is very simple. How are they taken out? How are they extracted? How are they stored? How are they taken to market? And then, of course, the environmental, certainly the environment to the way it was before the region was mined. So we then get to June, July. We've seen some board changes. Stephen Weir comes in as CEO, formerly CEO of ASX listed magnetite mines, and also Joe Belladonna, who initially spearheaded the company post IPO, moves to general manager. Working alongside Alan Mulligan, who's the technical director, and Alan Mulligan has many years' experience, particularly working on Ugandan rare earths projects. And he and the new chairman were recently interviewed. And I've just retweeted something this morning with a note from Allenby, which I'm coming on to in a second. So we then saw this week that the company announced these changes. They raised a further 1.2 million at 1.5p from institutional and professional investors, and appointed Ivan Murphy as chairman and also Paul Richards as non-exec director. Now, Ivan Murphy has worked previously on Ampasindava, and he's absolutely championed the bit to get on with it. He's actually been down the mines with the miners and the technicians. Previously, he took the project to Germany and to China, and he said when we were undertaking this work, we didn't have anyone really on the site with technical experience. Alan Mulligan has come in with that technical experience, and it's just boosted the project to a new level. So, of course, where the company is now, he's overseeing this transition, completion of the PFS, and then, of course, moving on to the building of a pilot plant, which will be the next step. So the company is poised to really, I think, explode into life over the next couple of years. Over 600,000 tons of rare earths, as I said, in situ there, and I think the key takeaway from this is that in terms of timeline, the PFS that's underway will be completed by the end of September, and indeed. This week, along with the fundraise, Allenby, the broker Allenby, produced a research note, and I think this is important to take into account. And I'm going to quote from that note: the Ampasindava project is in the final stages of PFS, has a sizable JORC defined resource base with a market capitalization of a mere 6 million. Harena is undiscovered and sells at substantial discounts to its ASX and TSX listed Brazilian focused ionic rare earth peers. So that's a really important endorsement, and I think it sets into context, that perhaps the difference between projects in the southern hemisphere. They're for UK investors perhaps a little bit too far away, and the focus needs to be greater. But I think this project is a high quality project, and I think we're going to see it come to life in the coming weeks and months once that PFS news is published next month.
So that's as soon as next month. So that's not too long away, is it? Really, PFS. That'd be nice.
No, that's
into September as well.
Yeah, September, good timing. They're now funded. They've raised that 1.2 million. So that will take them all the way through their process, and of course initiate the building the pilot plant. But they will need a project partner to come in with them to work and develop that. But everything is in place for Ampasindava to move towards production.
Okay. Good. Well, that's nice. Thank you for Alan, because of course the PFS stage is always a nice, interesting, and exciting phase for any mining company. I remember when one of my first bigger wins in the mining space. I'm trying to think which company it was. I can't remember the name of the company. I want to say Ariana maybe or something. Maybe Harena Resources. But anyway, it was. I got. I basically bought in ahead of a PFS study or something like that, and yeah, it was timed quite well. I'm not suggesting that will happen again, of course, but when you approach those studies, that's a nice big milestone to look out for.
Well, it
Because you
is.
really get a good sense, don't you, of what the economics are.
Yeah, you do, and I think bear in mind this company came to market with a 12 million market cap. It's now worth just 6 million, and these steps have been taken, and now we've got this new board in place. I think that's it's taken those steps, and when that PFS is published, that's going to be a huge step forward for the company. And I think at the very least we should see it return to its IPO level. So I think that's going to be really exciting. Also interesting to note that both directors who appointed, Ivan Murphy and Paul Richards, they've also have warrants as part of their fee, both at 3p and 5p. So they are very much incentivized to get the share price higher, and obviously to build the share price. So I think we can expect a lot more publicity, social media posts, interviews, and so on from the company in the coming weeks and months.
Yeah, excellent. Okay, thank you, Alan. Thank you. So, Dan, let's talk about Igraine then, a company we have spoken to on Stopbox a little bit before. I do like what they're doing then. I like talking to David. Not heard from them for a little bit, but it's, of course, battery energy storage for on-demand grid deployment, which, as we know in the UK, certainly if you're from the Yorkshire area, where I was originally from, every time I go back, there is big signs, Yorkshire Green construction this way, and it's all about revamping and renewing all the power lines, because apparently we've got a situation in the UK where offshore wind are being paid not to produce energy because the grid can actually not distribute that energy effectively. It all emanates from coal-fired power stations. So the entire sort of revamp of the grid and how we can bring renewable energy down to actually power the country rather than just a local village is what's being done. So again, it's kind of typical, isn't it, of UK planning? We'll invest loads in the offshore wind, but we don't think about how we're going to distribute it. But anyway, we're not on a political rant. The point is that green energy and things like small modular reactors, renewable energy, and things like battery storage, I think, is only going to get more prominent in the UK. But anyway, over to you, Dan. It's your one to talk about.
Yeah, I think you've pretty much hit the nail on the head, Mark, with the situation that Igraine are trying to address. So I've covered them on here a few times. I really like the offering the company's building up, and with it adding another interesting element to its approach this week for a new collaboration agreement, I think it's really worth having a look at on the basis it's so under the radar and so small at the moment. Its market cap sitting at less than £500,000 that if what it's doing gains even a small bit of traction among investors, which I think it stands a decent chance of doing given how important it is, like you just outlined, then the upside could be huge. So the core business Igraine has been developing over the past year or so focuses on meeting the growing demand for renewable energy storage in the UK. Long story short, the UK government is targeting full power decarbonisation by 2035, but currently it doesn't have anywhere near enough capacity to store the excess power generated by solar and wind farms when weather conditions are good to keep the lights on, so to speak, when they aren't, like you were saying, Mark. And with the mass adoption of AI and electric vehicles, meeting power needs are only likely to increase moving forward. The value of plugging the increasing gap between the renewable energy storage capacity we need, which is more than 200 gigawatts at last count, and that what we currently have, which is just over 5 gigawatts, that's becoming increasingly valuable. So Igraine has secured an exclusive agreement with Gem Energia just to do just that. The pair have adopted a model where, in simple terms, they secured the rights over battery storage development sites and manage their progress towards the ready-to-build stage before selling them onto an institution who then goes on to build it. So it's pretty simple on the face of it, but with the expected sale value of a typical 100 megawatt site ranging from anywhere from 6 million to 12 million pounds post-granting of planning permission against a cost outlay for Igraine and Gem Energia for reaching ready-to-build status of just £200,000, the profit they stand to generate if they put their model into action successfully at scale stands to be huge. So that's the core of the business. And with it, you've already got an emerging strategy with the potential to quickly reach a valuation that far outstrips Igraine's current market cap. After all, Igraine and Gem Energy have been hard at work, not just advancing their first development site in northwest England, but also building a pipeline of other sites that are ready to go. So increasing news flow on that front could have a very meaningful impact on Igraine's share price and its market cap. But where the company has potentially added another route to value this week is through its announcement of a collaboration agreement with Canadian renewable energy firm Harena Resources. Now, this is quite early stage, and sort of firm details were quite absent from the RNS. It was just an introduction to the idea, I think. But basically, Igraine is going to partner with Harena on developing pilot projects integrating EV charging infrastructure with battery energy storage systems for UK auto manufacturers. So the idea is that these systems can be rapidly deployed in contrast to larger grid-scale battery installations, which take years to reach commercialization. And the idea is this would enable auto companies to rapidly build out reliable charging networks for their customers. So that's a proper strategic play there. It has the potential to be huge over the long term if they can get a leading position. And while Igraine and Harena are currently at the very start of their journey, the good news is that they are already working on developing a pilot for one of the UK's largest automotive manufacturers, not yet named. And they also have a pipeline of potential clients in place. So we'll see where that goes. But the long and short of it, to me, is Igraine already looked like it could re-rate pretty significantly in response to even a small increase in interest and volume on the basis of that Gem Energia partnership that I started with. And now this new collaboration agreement adds another potential source of significant news flow with the potential to capture the attention of the market. So yeah, while this one remains very under the radar for now, I think it could be fireworks if either of those opportunities start to make some real progress and generate some decent news flow. I don't know what you think, Mark.
Yeah, well, like I say, I did like the sort of the concept and the idea, and I like David and his expertise in this space. I just would like to see, I suppose, a bit more happening, I guess. It's nice to have a great idea and a great sort of concept. I'm not saying this is just a concept, but it's a really good idea, and it seems like it's got legs, and they've got sites that they're working on. But the longer things sort of happen and these things don't materialize, you kind of start to think, well, is it going to happen? So I would like to see a bit more progress. I mean, the company is so cheap, as you mentioned, it's only 400,000, so it's basically a shell value at that point. So yeah, I mean, there's a lot of upside potential in there. But I would definitely, maybe it'll start to be seen when they start to actually deliver some news on the projects and get a project going. But yeah, I like the idea for sure. And I'd like to see them just sort of come out a bit more and talk about what's happening and give a bit of an update on where things are. But I'm sure they will when they can.
Yeah, I think you're right. I agree with you. But like you say, it's very low valuation. But unlike a Shell, they've got this very strong, these two strong agreements. So like you say, I think once that news flow does start coming out, we can actually see that translate into some value. I guess we're just very early to this one.
Yeah, absolutely. Absolutely. Okay. Well, Alan, over to you to finish us off then today.
Okay. So going to talk about another rare earth company. Well, I say rare earth company. This company's got a wider portfolio than just rare earths, but the flagship project is the Ulstrom Rare Earths project in Sweden. And of course, I'm talking about European Green Transition, Epicode EGT. This is AIM listed. The company's got a market cap currently of just under 10 million. It's been trading higher than that, of course, previously. I did speak to the CFO, Jack Kelly, a month or so ago, and Jack gave us a very exciting rundown of what's coming up later in the year. So, European Green Transition was set up. It IPO'd on the London market a few years ago to capitalise on opportunities created by the transition in Europe to a green, renewables-focused economy. And of course, the company chairman is Carl Friel, who needs no introduction. Carl is a hugely successful entrepreneur and investor, both in the pharma space and has a lot of experience in the mining space too. So he came back to the company as executive chairman to really start to drive things forward. And I think it's his influence, along with the quality of the projects, that will really see this company start to re-rate as we head towards autumn and winter. The assets, as I say, I'm going to come to Alstom last of all, but the company has assets, other assets in Sweden. Has the interest in the Bajala Copper Graphite project, an interest in Germany in the Saxony Critical Minerals project, an interest in Ireland too, in the Oltan Peatland Carbon Credit Project, which is an exclusive option agreement. And then, as I say, Ulsterum, where the company news flow really for the past year has been very much focused on Ulsterum. And Ulsterum is it's a region covers about 11 kilometers southeast Sweden, about 6 kilometers from the town of Gammelby, and northwest of the port town of Västervik. It covers the historic resource estimate, which is 4.5 million tons, grading 0.6% total rare earth oxide. And the company has undertaken an extensive drill program, which was finalized in December last year, where across the company drilled 13 holes across a wide area, and mineralization, rare earth mineralization, high grade, was intersected in all 13 holes. And the company said at that point that the district scale of the project, the area it covers, confirms and supports European green transition strategies to monetize project via sale or partnership. And in particular, the structures encountered at Ulsterum West and Djupadal, that's with the Swedish spelling, of course, demonstrates vertical continuity from surface to outcrops up to 150 meters down. So you take that over the district, you've got something of real substance there. So when I spoke with Jack Kelly, we discussed the progress since the IPO. Of course, that was around the time of the full year results, and of course the efforts in Europe to ramp up exploration for rare earths, which is what makes Ulsterum so important. And of course, early this year, Carl Friel came back to exec chairman, and I think it's Carl and his team that are going to secure that partnership and obviously move Ulsterum onto the next phase. So an exciting sort of outlook for the company. Certainly, we're trading currently, as I say, at 9.76 million at 6.75p. The company is fully funded, and we're expecting some big movements later this year once Carl and the team secure a partner to help them develop Ulsterum.
Okay, and you've been following this company for a little while. I think almost since IPO, haven't you, Dylan?
Yes, I have. Yeah, it's and as I say, I think what sets it apart, you've got a great team of people there, but also it's Carl Friel's wide network of connections, his experience and standing as an entrepreneur and investor, and of course he brought Amrit Pharma to market, turned it into a multi-billion-dollar company. Launched what was originally a company called Open Orphan, which is now, of course, hVivo, with a market cap of over 200 million. hVivo, of course, set up all of the testing centers for COVID, where volunteers were given a watered down version to develop a cure or to develop a vaccine. And hVivo is the go-to company for human challenge testing now for for various infectious diseases. Also, Poolbeg Pharmaceuticals, of course, Jeremy Skillington, the chief exec of that. Carl has headed that up, and Poolbeg was spun out of hVivo a couple of years ago. So Carl has a track record, and I think that's what really does set this project apart is the leadership, and it's so often the way, isn't it? If somebody is in place heading that project up, then expectations are much greater based on what that person's achieved in the past. So I think given the data that we have from Ulstrom already, given Carl's pedigree in the sector, I think we're set for an exciting end of Q3 and Q4.
Okay, excellent, good. Well, thank you very much, Alan and Dan, for your time as always.
Thank you, Mark. Thank you, Dan.
Cheers, guys.
Some interesting companies talked about there. So let's see what next week brings. See if it's equally as quiet. But if there's stuff to talk about, we'll be back here, I'm sure. So enjoy your weekend, and we'll catch up later.
Cheers, Mark. Cheers, Alan.
Cheers, guys.
If you enjoyed this interview, then give us a thumbs up, a like, or a retweet. Subscribe to us on YouTube or follow us on Twitter, and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stopboxmedia.com. Thank you for watching.